Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Tuesday. In today's program, I want to talk about another company rumored to start doing some major layoffs. Again, don't forget, we've had quite a few companies who have actually done layoffs over the last couple of weeks. But anyway, we're talking a little bit about a new one apparently about to do so. Plus, another warning about 2023 from a certain CEO. And I want to share with you some strange predictions from a bank who thinks there's going to be quite some big surprises happening next year. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should they be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So yes, again, like I say, for the last couple of weeks, we've had Facebook, we've had Twitter, we've had Snapchat, we've had Amazon doing major layoffs. Now, PepsiCo is rumored to be doing some major layoffs. In fact, Wall Street Journal has reported that PepsiCo Inc. is set to lay off hundreds of workers and its North American snacks and beverage divisions. In a statement, they have said the job cuts are part of a move to simplify the organization so we can operate more efficiently. And it's quite a surprising move, actually, by PepsiCo, because they've already forced a number of redundancies for a number of early retirements in their company as well. So they're one of the very few companies, though, who are able to expand its profits margins in Q3. Don't forget, a number of tech companies really disappointed in Q3, the likes of Amazon, Google, Facebook, obviously, which is not having a very good time of it, etc. Meta in particular not having a particularly good time of it. So PepsiCo actually did have a reasonable earnings in Q3. So this seems like quite a strange thing. It looks like, don't forget, I reported about a month or so ago, a number of banks were making cuts in certain areas to build up a surplus of capital to weigh the incoming storm. So I just wonder if these latest layoffs by, or if they do, this is what the Wall Street Journal is reporting, whether or not PepsiCo is doing something similar, building up a capital of, a bit of capital to weigh the storm coming in 2023, which I move on to the next bit I want to talk about, because JP Morgan CEO, Jamie Dimon, warns the market again. Don't forget, it's only about a month or so ago, he warned the market to prepare for a financial hurricane, because he is a pretty much doom and gloom soothsayer. Okay, he does think that potentially the US and the globe is going to be hit by a pretty heavy recession in 2023. And he puts it this way, he says inflation could tip the US into recession in 2023. And in his own words, he says consumers have 1.5 trillion in excess savings from the pandemic stimulus programs and are spending 10% more than in 2021. Obviously, they're spending more because prices have gone up a lot. He also goes on to say, inflation is eroding everything I just said. And that $1.5 trillion will run out sometime mid-year next year. When you're looking out forward, those things may very well derail the economy and cause a mild or hard recession that people worry about. Pretty gloomy stuff. He also went on to say 5% interest rate. That's don't forget the market had originally priced in 475. Now the general consensus is between 5.5 to maybe 575. And he also goes on to say if the Fed does end up raising or increasing interest rates to 5%, that may not be sufficient to subdue inflation. So pretty gloomy forecasts. And like I say, the bears are beginning to wake up again. But this is quite a gloomy forecast to have that. But anyway, before we go into looking at the market, and I want to share this interesting piece which I shared with you about another bank which has some strange predictions. I want to share something with you which is just as exciting. I'm a big fan of the Elliott wave theory as well, by the way.
Let's go.
Very big fan.
I traded the DAX in the morning. Showed some really good signs of volatility as well.
Anyway,
join James and Stefanos every Wednesday at 1800 UTC for another lesson at Tixee Trading School. Your key to a better understanding of the financial markets.
There we go. Indeed, the next episode of Tixee Live presents the Trading School is happening tomorrow, Wednesday at 6 p.m. UTC. Tomorrow's subject with myself and my colleague Stefanos will be discussing and talking about will indeed be market sentiment, which I think is an area of analysis quite a few newbie traders, or many even professional traders or experienced traders, tends to overlook. So this is a topic we'll be talking about. Don't forget, of course, obviously, these videos are broadcasted live, of course, because live does indeed mean live, but they won't be broadcasted on YouTube for about 2 weeks. If you want to attend the event live and have the opportunity to ask myself and Stefanos questions throughout the episode, then please click on the link below and register, and hopefully we'll see you all there. Okay, anyway, yesterday, don't forget, I did a little video on two completely opposite opinions on Bitcoin in 2023. And the same bank has actually made several other quite strange predictions which could surprise the market. And some are quite interesting, which I thought I would share with you in particular, because I think they're quite fascinating. Because this is the time of year now. This is the end of the year. It's December, obviously. This is the time of year now where a lot of banks, investment banks, will do their predictions or their forecasts for 2023. They start predicting what they think is going to happen and what are going to potentially be the main obstacles or the main surprises which may catch us out. So here's a couple. I find them quite fascinating. Not that I agree with any with I'd say, nobody knows for certain. Not very I totally agree with them, but I find it quite fascinating. Anyway, number one, the Fed could cut interest rates by 200 basis points if the US falls into a deep recession. That one I do find really surprising. I mean, that would be a really massive surprise to the market, huge surprise. But I can't necessarily see that, to be honest. 200 basis points. Like I said, I'm with many of those who think they won't cut rates next year. They'll wait till 2024. But anyway, 200 basis points if the US falls into a recession. That's number one. This one is possible. Okay, this one I could potentially see being a surprise. Oil could fall to $40 a barrel, which is what is it now? That's 50% of, or just under 50% of where it is trading at the moment. Could fall to $40 a barrel if global recession sets in and Ukraine war ends. Maybe not quite $40, but I could certainly see it come under pressure if we do indeed have those two issues come in. The other one, which I shared with you yesterday, Bitcoin could fall by 70% to $5,000. I did the reasons for it yesterday. Okay, obviously. which is quite, like I said, maybe I can see if we have a recession and risk goes off the market or risk appetite dries up, I can indeed potentially see Bitcoin coming under pressure next year, like it has been during what we call the crypto crisis this year. But 70% to $5,000, I think there's too many hardcore Bitcoin fans out there to make it go down as low as that. But anyway, again, that's one of their predictions. Number 4, euro to skyrocket by 19% against the US dollar to 125 if Ukraine war ends. Now, I have no doubt the euro could potentially get a boost if there is a peace treaty signed or peace agreements agreed between Russia and Ukraine and the war ends. Because don't forget, one of the most things which has pressured the euro a lot, obviously, is the fact that they are facing an energy crisis, obviously, especially a gas shortage. So that could give the euro a boost. Whether to 125, I mean, that's maybe a little bit dramatic, because don't forget the other things they have on them as well is the US economy, though it's likely to fall into recession, potentially a mild one. The EU will most likely fall into recession, which would be a lot heavier. As well as that, the US economy is a lot stronger currently and is holding up against the Eurozone in particular. So that maybe, like I say, maybe we could see a little bit of a boost and let's see a little bit of pressure off it. Maybe that dramatic again. Like I say, who knows? These are the surprise predictions. Nobody knows for certain. Number five, Nasdaq could crash by another 50% as more tech companies suffer a wave of bankruptcies. Again, like I said, that potentially could be a situation, because, like I say, we are, the tech companies have suffered a lot this year. And many analysts are predicting 2023 to be just as bad, maybe even worse than this year. So yes, the tech companies will struggle. Like I said, they've done a number of big layoffs. Meta in particular has fallen over 60%, hasn't it, this year, year to date. Tesla has been under an awful lot of pressure. They're including the tech. Amazon and Netflix is had its moments as well. So I could see that maybe 50%. I know 50% it sounds quite dramatic, but like I say, if we do fall into recession and they keep interest rates high, like the Fed says they're going to keep them high for a considerable rate of time, then yeah, we could definitely see maybe potentially more pressure on the Nasdaq in 2023. 50%, again, we will have to, if I say. And the final one, food prices could plunge by 15% if the Ukraine war ends. Yes, obviously, the Ukraine war ends, you could see potentially a drop in food prices, because don't forget the conflict in Ukraine has not helped the food crisis at all, because don't forget Ukraine is one of the biggest exporters of grain, etc. So that could be a big major difference. But let's say the other issue with food prices as well is not just the Ukrainian war. It's obviously inflation as well. That is being a huge problem. People can argue, yes, inflation has been caused by the Ukraine war. It is a part of it, but it's not the overall driving factor behind the reason why inflation is so high. So anyway, inflation will need to come down dramatically as well for food prices to come down as well. But anyway, those are the really interesting 6 predictions I wanted to share with you from Standard Charter. Like I say, as we get every more, because like I say, it's that time of year now where central banks will start sharing their ideas, I will certainly share it with you. But anyway, let's have a quick look at the market and see what's going on. Let's start off with PepsiCo, as we've spoken about them today with that layoff rumor. As you can see, it opened around about $183. It actually did fall quite dramatically. It's fine. It's off the lows currently at the moment. Fell as low was around about just above $181.20. Currently bounced slightly, but not a lot, to $181.65. So again, that is in the highlight, because like I say, what like I said this morning, more firms we're going to need to start laying off staff for the Fed to stop. So are we going to see a lot more of this? Let's go with the indices, the equities now as well. Okay, again, we're under 200-day moving average, the S&P 500, under 4,000 points. It's been flirting with that throughout the majority of the day. Currently trading at 3,960 points. If we look at it on a daily as well, again, like I say, that we're now set to have 4 days of losses for the S&P 500. It is going to show that happy feeling which we had has really been dampened by that NFP number on Friday and that impressive ISM services PMI yesterday. Okay, so we're under, more importantly, that 200-day moving average. That's the key. Next real level for me is just above the 3,913 points mark. But again, like I say, look set for a 4th day of losses. Nasdaq is the same. Again, couldn't break that key level we were watching for a long time of 12,025 points. It is finding a teeny weeny bit of a support though on a daily around that 50-day moving average of 11,625 points. Let's go to currencies as well. Look at the euro dollar holding its own at the moment above the 105 handle, pretty sideways throughout the day. This is still above the 200-day moving average. So the key area for that is 1.03882. The cable is the same under the 122 though, but key area for it still remains 121.092. Quick look at gold, obviously. Okay, 2 days of losses where it couldn't break through that key area of $1,803, but it's still trading above that 200-day moving average. Key area 1,759, so it's still maintaining itself there. It'd be interesting to watch this yellow metal, and I'll be probably looking at it a little bit more and do maybe a special on it at some point, because if we are getting more and more recession talk, will that ignite gold's safe haven status? So that will be worth keeping an eye on. I'll be doing a little bit more on this because it's beginning to look quite interesting. If we can get past this level, then I will be very interested in keeping an eye on it. Okie dokie. Other things to happen or coming up this week. Like I say, it's the main weeks next week. Australian GDP tomorrow, EU GDP tomorrow. Bank of Canada interest rate decision, Michelin consumer sentiment. The S&P as they, or US equities as they currently stand, like we already look, all in the red. S&P negative 0.97 as from the open. Nasdaq negative 146 from the open, and US 30 currently negative 0.59% in the red. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Or let me know your opinions. Let me know what you think. Don't forget, if you think of a question later, okay, you can put it in the comment section, either on Facebook or YouTube. I will see them, and I will reply to them next time I go live on air, which of course will be tomorrow at 9:30 a.m. UTC to cover the European session and any developments from the US session. So please come and join me for that. If there is no questions, not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, find it interesting and useful, and you put up with me, then give me one of these. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.